Hello traders, this is Fawad Razakzada, market analyst for City Index. Today is the 11th of March 2024. Today we'll be looking at gold and silver. After finishing at a record high last week, gold is now up for the 9th consecutive session and it's looking to add on to the gains made last week. The key level of support to watch now is the December's old record high at 2146, which could turn into support on a potential retest. Below that, we have this key support area as I've shaded on the chart, where gold had previously found a strong resistance from, but it's broken away from that area now, so it will take some effort to get gold back all the way down to that area from where we are at the moment. With gold now trading at record highs, there's no prior reference point to watch out for, but you could use Fibonacci extensions, for example, from this December high to the low that was made later in the month, and you can see the extension levels of that. In fact, the 127.2% extension was tested on Friday and we retreated slightly from that level at 2193. The next Fibonacci extension level above the 127.2 is the 161.8, which comes in at 2253, and we could get there later on in the week depending on the outcome of the inflation report from the US. Now, with gold hitting record highs, you would think silver is also rallying sharply. Well, it hasn't been the case, not yet anyway, and if I show you the chart of silver, you can see that it remains stuck in a consolidation pattern. In fact, if you zoom out and to the higher time frame charts like the monthly here, you can see that it's miles away from its previous record high that was hit back in April 2011 at just under 50. So could it catch up and start heading towards 50 in the coming weeks and months? Well, that's a key question, and I wouldn't be surprised if it were to start a motion towards that area, because we've seen gold hit record highs, as well as Bitcoin. All the major indices in the US have hit record highs, but silver has clearly lagged behind, and I think it's a lot to do with China, where concerns about demand have also held back the equity markets there until recently. Now we are starting to see some momentum come into the Chinese equity markets, and that could also play a role in base metals like copper and silver, and the metal is now up over 7% on the month, so this could well be the start of a potentially large rally. Let's see if we will break out of this consolidation area. At the moment, silver is testing this bearish trend line of the triangle pattern that has been in place for several years now, or for a few years anyway. Let's see if it will break through this area, and the next level of resistance on this time frame comes in at around 25, which corresponds with the bearish trend line of this consolidation pattern. Let's zoom in now and look at price action in greater detail. And if you look at the daily chart, the key level that was previously holding silver back was this level at 2350-ish, where we also had the 200-day moving average converging. Silver had attempted on numerous occasions throughout this year to break through it, but failed until it succeeded earlier this month. Since then, silver formed this inverted hammer candle, which should have been bearish, but it wasn't. There was no downside follow through, and instead the bulls stepped in and drove silver price higher. On Friday, we saw a similar pattern in that it formed another inverted hammer-like candle, but so far we are again not seeing much downside follow through. So these are potentially bullish signs that suggest that silver could potentially be on the way towards at least reaching its high that was hit in December at 2590-ish, but potentially it could go a lot higher from there. So in terms of short-term support level to watch, 2422, the high of that inverted hammer candle that failed to lead to any downside follow through, is acting as support now. As you can see, that level is key. So for as long as that level holds today, I think the path of least resistance will remain to the upside. For more analysis and trade ideas, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.